Hello and welcome, I'm Suyash Maheshwari and you are watching First Take here on News 9 where we break down the morning action on Dalal Street. But as always, let's begin with a quick check on how the global markets are doing. Now, Wall Street snapped its 5-day winning streak to end marginally lower on Tuesday. The tech-heavy Nasdaq was the biggest loser among the three major indices, closing 0.59% lower in Tuesday's trade. Now, meanwhile, S&P 500 on the other hand was down 0.2% and Dow Jones Industrial Average ended 0.18% lower. European markets also closed slightly lower in Tuesday's trade. The Pan-European Stoxx 600 index lost 0.09%, weighed by banking stocks ahead of Fed minutes release. Asian markets also opened lower this Wednesday morning on the back of a weak handover from the Wall Street. As we speak, Hang Seng is down 0.07%, South Korea's Kospi is down 0.25%, and Japan's Nikkei was actually among the gainers. It was up about 0.5% or so. The three horsemen, the three major factors that we have been tracking here on News 9, the 10-year treasury yields, the crude oil prices and the dollar index on a day's basis was largely unchanged. The US 10-year yields as we speak sit at around 4.4%. The dollar index was still below the 104 mark, around 103.5 sort of levels. Remember, yesterday we slipped to a 2.5 month low on the dollar index, so we are still holding on to those levels. Brent crude as we speak is hovering around the $82 a barrel mark. Now coming back home, Indian markets opened on a muted note today, with Nifty opening around the 19,784 mark. As we speak, we have moved into the positive territory as of 9:30 a.m. Nifty 50 was up 0.06%, marginally below the 19,800 mark, just about 4 or 5 points shy of it. Sensex on the other hand was up 0.04%, sitting below the 66,000 mark. Mid-cap 100 index opened 0.07% higher and was above the 41,900 level, whereas the small cap index is seeing some bit of a correction this morning, and as of 9:30 a.m. it was down 0.37%, sitting firmly at 13,800 mark. India VIX, the volatility index, has seen a little marginal dip. As of 9:30 a.m. it was down 0.24%, above the 12 levels. With that, let's also welcome Akay Bhagwat, Senior Vice President at Derivatives Research at JM Financial. Hello, welcome to the show, sir. I want to begin by asking, hi. So in the last 3-4 sessions, we have seen good consolidation in the markets. We have been trading in a narrow range. I'm talking about Nifty here, where on the upside resistance has come in around 19,850 sort of levels. But on the downside, we have not seen any major sort of a correction. So what are you making of the market movement? I think as we speak, we have also reclaimed 19,800 on Nifty. Do you think a close above that would clear the way for new all-time highs?
Yeah, definitely, Suyash. If you look at the chart structure of the Nifty, the November series has been a very strong month for the bulls. As I understand, 19,850 is a stopover resistance for the Nifty. When I mean a stopover is that if you look at the last 4 or 5 trading days, it's been stuck in a range oscillating just around the 19,800 mark. And one of the primary reasons for this is the significant positioning in the call writing bets at the strike of 19,800. Now, it's just a matter of time when the levels of 19,850 should clear off. That would be the first sign that unwinding can kick in the call writing bets, and that would be a price as well as a derivative signal for a strong uptick in the Nifty once the breakout of 19,850 is seen. So the targets of 20,000 plus are definitely on the cards. It's just a matter of time when the breakout will happen. As I understand, the chart structure is strong. Only if the Nifty goes below 19,700, there might be a temporary consolidation phase which might extend for a few more days. But as the current trading stands, the market is all poised for a breakout and setting up to conquer the 20,000 mark.
And also want to get your view on the banking pack. Now, Nifty Bank between the two has been the weaker, at least in the last few sessions. On Friday, of course, we saw a big correction. But on Monday's trade, we saw formation of a doji candle, and then yesterday we ended higher. But today morning, again, we are in the red for Nifty Bank. What's your view there, sir?
Well, Bank Nifty, has been subdued since last Friday, and primarily that was post the news break which we saw last week, where we did see a gap down opening below the 44,000 mark. Now, the last four trading sessions in Bank Nifty has been lackluster. Today is the weekly expiry for the Bank Nifty, so you might expect some break of the lackluster range which we have been noting in the last 4 days. The open interest positioning in the derivative segment is signaling resistance at 44,700, where significant call writing bets are placed, and 44,500, where a lot of put writing bets are placed. So it's just a matter of time when these levels should be taken out, and you can find a momentum or a directional range catching in a Bank Nifty. As I understand, Bank Nifty is a laggard right now. So if you are buying, it's the Nifty which is the better choice in the indices. Bank Nifty might pick up momentum once it crosses 43,750, but the targets are small. We would like to be a bit more conservative here. 44,000 would be the immediate target, and then we will again review how it works from there. So right now, the range for Bank Nifty, buy above 43,750, or 43,500 breaks. You can see consolidation phase extending to a few more days.
All right, so shifting focus to stocks, specific stocks now. Like one of the stocks that was on my radar was Titan this morning. I mean, phenomenal returns we have seen in 2023 alone, where the stock has risen about 30% or so, more than 30% actually. And yesterday we touched a new lifetime high on the stock. Even today we have touched a fresh all-time high. The stock is also trading higher this morning. What's your view on Titan stock? Can we expect more upside on this stock?
Yeah, definitely, Suyash. Technically, it's broken past the 3350 resistance zone in yesterday's trade. So that's the momentum which kicks in the stock, and it gives you a target of around 3475 from a trading perspective. 3350 is the support base. A lot of put writing action too is shifting at the strike of the 3350. So definitely you can go for buying in Titan, or you can stay invested. The targets work out, as I said, 3475 from a trading perspective.
Another stock on my radar, sir, is Titagarh Rail. I mean, the phenomenal returns in the last 5 days, I think it's up about 17% or so, but we are seeing some bit of a profit booking taking place in today's trade. I think the stock has actually moved in the green as we speak. It's has rescaled the 1000 mark, which by the way it had claimed for the first time in yesterday's trade. Given the the upside that we have seen, 17%, 18% sort of a movement in in the last 5 or 6 trading sessions, what's your view on Titagarh? Is there more upside remaining, or can we expect some profit booking from here on?
The railway stocks are back in the limelight, and Titagarh Wagons saw a technical breakout at 900 pre-trading sessions back. That was the momentum pickup point in the stock. And as I understand, despite the fact that the trading momentum indicators are overbought from short-term perspective, still I believe there are more legs to go on the upside in Titagarh Wagons. Possibly 1075 to 1100 is where you can look. You can look set the targets with a time frame of 10 to 12 trading sessions. So yes, maybe a small consolidation is likely, but be invested. 1075 to 1100 targets are on.
So another stock on my radar is Coal India. I mean, the kind of returns that we have seen from this PSU stocks, I think it's up about 50% or so in 2023 alone, has been scaling, lifetime highs on a regular basis. I think there is also a news trigger wherein Coal India management has come out and said that it expects to spend around 16,500 to about 18,000 crores in capital expenditure over the next 5 years. They expect margins to improve by volumes to improve by about 9% in this particular financial year. The kind of returns, I think the stock has come out of a bit of a slumber of the of the last 2-3 years and has been giving good returns. Is the story going to continue?
Definitely, the story is going to continue. Coal India has been a multi-bagger stock. It's out of its shell in 2023. You can see the phenomenal returns it's offered to the investors. And as I understand the chart structure right now, last 4 days have been noted a bit of profit taking in the stock. But I believe the momentum will regain from the support area of 325. So can expect a pullback, a recovery again from the level of around 325, 328. These are small trading targets targets which I'm giving you, but if you look at the longer term charts, I think this stock is all setting up to get past the 400 level from a 3 to 5 month perspective. So longer term, stay invested. Even for trading, you can reconsider buying it at the current levels or on dips around 325. A rebound will see the stock revisiting the recent swing high of 360 levels.
All right, that's a view on Coal India. But sir, before we let you go, if you could give us your 4 to 5 short-term trading ideas.
Yeah. So I have 5 trading ideas with a mix of longs and shorts. Primarily, they are all on the long side. The first trade is in the healthcare space, Apollo Hospitals, where a strong breakout targets 5630 to 5675. Keep a stop of 5360 on this trade. Tata Motors from the auto space is all gearing and is setting up for 700 plus targets. So 708 and 718 is the target I look forward to. Stop loss 662. Marico Industries from the FMCG pack and seen strong unwinding from the derivative space, a possible double bottom candidate recovering from its strong support base, should target 542 to 541. Keep a stop of 514 as a risk management on this trade. One short which I have here is the State Bank of India, a slight underperformer in the given scheme of things. Shorts building up in the derivative space. So these are small trading targets where 545 to 537 can be revisited in the month of November. Stop loss 571 on this trade. And lastly, from the pharma pack, Torrent Pharma is one breakout stock which we noted a couple of days back. This would target 2187 to 2210 with a stop of 2075.
All right, those are the 5 trading ideas from Akshay Bhagwat. Apollo Hospitals, Tata Motors, Marico on the buy side, including Torrent Pharma as well. SBI on the sell side. Sir, appreciate your thoughts. Always a pleasure speaking to you here on First Take. Thank you for joining us.
Thank you.
But moving on, let's look at how the markets are doing. I'm made to believe that Nifty has rescaled the 19,800 mark. And as you can see on your screen, as of 10 a.m. this morning, we were up. Nifty was up 0.2%, almost 0.2% at 19,820 mark, whereas Sensex has reclaimed 66,000 sort of levels. Nifty mid cap is also edging higher, making way towards the 42,000 mark. And the small cap index continues to remain under pressure. Now, as of 10 a.m. this morning, it was down 0.35%, but sitting above the 13,800 mark. Volatility has slipped further. India VIX as of 10 a.m. was down 0.61%, above the 12 levels. But with that, let's also welcome Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Hello, sir. Welcome to the show. Now, good morning, sir. Now, sir, since, we touched a low of around 18,837 or so on Nifty on October 26, the markets have rallied by about 900 points. And we have seen a good bit of consolidation also, in the last 3 or 4 sessions where maybe we have not moved up as much, but we are not, we have not fallen as much either. What's your view on Nifty? A significant close above that 19,800, which a lot of technical experts are saying is a make or break level. Can we perhaps make way towards that all-time high levels?
Yeah, absolutely. I think look at the way the market is poised. Look at the way the global developments have taken place over the last, I would say, about a week, 10 days time. The scenario in US is now completely changed. Look at the commentary of the large global fund houses about 15 days back and now. I think, previously they were talking about higher for longer. The oil prices were shooting up and all kind of thing was happening. And the risk aversion was at probably close to its peak. From there, the data started coming which clearly showed that, the US economy was doing better than what was expected. The inflation also was much better, much lower compared to what was expected. Now, this has now led to a complete U-turn in the sentiments in US, where now they're talking about, there's no question of higher for longer. The question is when the rate cut will come. And by and large, the consensus is that, towards the second half of next calendar year, US Fed will probably go ahead and reduce the rates by 100 basis points. Now, this is a completely changed scenario. Risk on mood is coming back gradually. US yields are softening. Oil prices have come under control. This is not again going touching 95, 100 and all. It's went below $80 per barrel Brent, and now it's hovering around 82. So I think the overall risk on mood is back, and that's leading to FIIs participating in a big way once again in Indian markets. We may not have seen the reflection in the numbers of buy, but they have reduced the short significantly and probably started getting on the long side as well, as the data shows of last few days. So I think the FII change of mood has definitely helped Indian markets, come to these current Nifty levels. And I believe that with the macro indicators, domestic macro indicators also falling in place, corporate results being by and large better than expected, there's no reason why we should not scale newer highs.
All right, sir, as you rightly mentioned, a lot of the global brokerages are expecting a 75 to 100 BPS cut by second half of, 2024. But I mean, I was, listening into Mr. Powell and team, the minutes that came out, it indicated that US, while they might be done with rate hikes for now, they are still a little apprehensive about, and they don't really have that appetite for rate cuts. And monetary policy, at least from what they are saying, at least it looks that it will remain restrictive. But the market is expecting a 75 basis to 100 basis point cut. And on the back of it, we have seen a tremendous rally across the board from US markets to emerging markets as well. But, what do you make of Fed's comment? Do you think that, this comment about, keeping rates and monetary policy restrictive, will that hurt the sentiment?
Not really. In fact, if you see US markets yesterday, the markets didn't really tank after the Fed minutes were out. And if you look at the bond market, I think bond market by and large, to a great extent, I would say, discounted and ignored the comments. See, the writing is on the wall. The Fed will have to keep taking a stand whereby they don't let the expectations run ahead of the reality. So they have to be cautious in their statements. And that's what pretty much all the central banks do. They have to ensure they need to talk to the market rightly. And Fed is doing that. So I don't think we need to read too much into the Fed minutes of yesterday. I think the data is what will drive Fed as well as the markets. And the data very clearly shows there is no need, no rationale for any further hike or keeping the rates high beyond a point of time. Now, if the data continues to support this thesis till, let's say, the first quarter or the middle of second quarter in the next calendar year in US, I think there will be tremendous pressure on Fed to really come ahead and cut the rates the way it is being anticipated.
All right, sir. I mean, to your point, what do you think is on cards? Can we expect a 75 basis to 100 points cut by the mid 2024?
Yeah, absolutely. That's exactly what my belief is also. But it'll all depend on the data, how the data comes. As I was saying, over the last 15 days, the entire scenario has changed based on the data. Now we'll have to carefully watch the data. And the joker in the pack, I would say, is the geopolitical situation. That also will play a significant role going forward. So we have to carefully monitor that.
Now, sir, you rightly mentioned that the three major forces, the three horsemen as we call it, oil prices, your bond yields in the US and the dollar index, they have moved in favor of the equities, and there's a risk on sentiment for the equities. And emerging markets is benefiting from it. Even in November, Nifty is up, I think, around 4% or so, but we are still relative underperformers compared to South Korea and Taiwan. Do you expect that to change perhaps, because our earnings season has been phenomenal, 14 to 16% earnings growth. I mean, far exceeds the kind of earnings growth you would see from a Taiwan or a from South Korea. So what's your call over there, sir?
Well, the way I look at the entire emerging market, or particularly this, Taiwan, South Korea, China, is that India is a strategic long-term bet, whereas some of these markets, including China, is a short-term tactical bet. Right. If you look at the valuations, I think the valuation-wise, India looks rich. When you compare them with other emerging Southeast Asian markets, including China, and some of the FIIs are a very broad universe. There are hedge funds, there are arbitrage funds, there are short-term funds, and there are long-term funds, pension funds, and others. Now, the long-term guys will definitely continue to keep betting on India and moving money to India. As far as the short-term funds and guys who have a short-term horizon, they will take a tactical step and probably move money into China, Korea, Taiwan, because the valuations there look attractive, and probably there is a rationale for valuation improving in these markets faster than they will probably improve in India at this stage in the short term.
All right. Sir, I think one of the questions I think is imperative for a retail investor over here is we are talking about tactically, shifting your allocations in the short term. Can retail investors do that in the market? What's the best way for them to gain exposure to, let's say, a US market or a Taiwan market?
Well, I think there are funds, as we all know, there are mutual funds who have introduced schemes which invest in US markets and some of the other emerging markets. But unfortunately, the performance as far as other emerging market funds are concerned hasn't been anything great. And, I won't really advise, Indian domestic retail investors to try and take benefit of this short-term trend in the other emerging markets. US markets, of course, people have made money, funds have done very well. Obviously, US markets have done very well. But if you're talking about trying to benefit out of this short-term blip, or short-term, upside in Taiwan, China, South Korea, I think, let's watch these from the sidelines. Let's focus on Indian markets. We still have enormous potential as far as, short, medium, and long-term is concerned in India also.
All right, sir. Another, thing that fell on my radar was that Jio Financial Services has submitted an application to Reserve Bank of India for conversion of the company from an NBFC to core investment company. Now, can you help us understand what does this mean? Is it a nomenclature change, or the business is going to change for the company?
Well, I think, what they're trying to do there, in fact, the plans which they announced, they're talking about an insurance company, they're talking about asset management company, they're talking about other types of lending and other financial activities. Now, if they have to do that, they need to do it under different licenses. Probably all this will become subsidiaries of Jio Financial Services. Now, as we understand the core investment company regulations, if an NBFC or an investment company has about 90% plus of its assets in investments in other businesses, so it becomes, it needs to be classified as a core investment company. I think that's what they're trying to do. So I think structurally, what they're signaling to the market and the RBI is that Jio Financial Services will become the umbrella holding company for a clutch of financial services businesses.
Now, sir, it's, a flurry of IPOs opened in today's date. I think 4 IPOs have opened, and Tata Group's first IPO in nearly 20 years in the name of Tata Technologies has also opened for subscription. And, even I was looking at the financials, the company is debt-free, has a good presence in the R&D space, but there's a high concentration risk as 40% of its entire revenue comes from Tata Motors and JLR. Do you think that is the reason why, the company's valuation, the valuation that they are asking for is significantly reasonable compared to peers?
Yes and no. I think, at that point is valid. They have 40%, 38% of business coming from Tata Motors plus JLR. But also, I think they're leaving a lot of stuff on the table for the investors to benefit. Tata Group has been known for their superior corporate governance practices, and I'm sure this has played a role in the pricing of the issue as well. As far as Tata Tech is concerned, I think it's a superb company. Engineering R&D is a niche area where there are few peers. If you look at the breakup of their revenue, 50%, almost 50% comes from the automobile sector. Another 30% is coming from aerospace, balance from heavy machinery sector. Now, look at the automobile. The biggest transition in our lifetime. Why in our lifetime? Maybe in the entire auto industry's lifetime is happening. The transition from ICE to EV, and now this transition. There's a big role for an ER&D company operating in this area, and that is the niche where they are operating in. Again, if you look at aerospace, I think there is a significant amount of changes happening. This sector is booming, and we are talking about private space travel. Now, under these circumstances, this is another area where there's tremendous potential going forward. They operate in this area in the ER&D space. Now, I think these are fantastic areas to operate. There's a great track record they have established already. This is not a new company they have incorporated and started. This is a pretty reasonably old company, 94 vintage, and they have a track record of delivering, performing, a strong balance sheet, great parentage, good credentials in the market. So I think it's absolutely fine to go ahead and apply for this IPO. To the specific point of the concentration of business, I think they will diversify. And look, today I think JLR and Tata Motors are a leading player in EV in India, and globally also they are trying to become. There are not too many EV players. Also, this company works for Tesla. They works for VinFast. So other leading EV companies. So I'm sure they will diversify going ahead, and it will be a more diversified revenue stream going ahead. So we should not get too perturbed with this 40% concentration risk and things like that. I think it's a great company coming at a great valuation at the right time and in the right sectors.
All right, sir. 3 other IPOs are also opening: Flair, Writing, Gandhar Oil Refinery, and Fedbank. Between the 4, what would be your order of preference? Tata between the 4, including Tata Tech, I mean.
So Tata Tech definitely will be number 1. I think I would also look at Gandhar and Flair, and finally Fedfina. Not because the one is better or worse, just the fact that I think the potential for upside based on the valuations at which they are coming in and the opportunity, considering the export. Gandhar's 50% revenue comes from export market, international markets. I think that's a very good thing to have under the current circumstances. To a great extent, protects them from currency fluctuation and a whole lot of other things. The opportunity size is humongous. The entire, most of the FMCG products need soaps, shampoos, creams, all that needs the base oil, which is white oil, which is Gandhar's, Gandhar is supplying. They're a very strong player in the industry with great track record. As far as Flair, it's a very well diversified business into stationery, writing instruments, and other things. Right. The brands are strong, and there is again a significant potential with. We know how India is developing, what kind of penetration of education and educational requirement is happening, and the kind of focus government and the private sector has on education. So I think the scope for Flair also is good. As far as Fedfina is concerned, they're talking about catering to the unbanked segments, and that is their focus area. That's what they're clearly saying. I think it's a good niche. There is competition, there are challenges, there are asset quality issues in this particular segment from time to time. So while I don't want to take anything away from Fedfina, but if you ask me to rank them in order of preference, that will be my ranking.
Right. So that's Sudeep sir for you. Sir, always a pleasure talking to you. Appreciate your thoughts, sir.
Thank you.
But before we wrap things up, let's also look at how the markets are holding on. From what I can see on my screen, as of 10:10 a.m. Nifty is again holding on to those gains and is sitting above the 19,800 points, about 17 points up from it. Nifty 50 was up 0.17% at 19,817 levels as of 10:10 a.m. Sensex, on the other hand, is also above the 66,000 mark, sitting at 66,021 levels as of 10:10 a.m. Mid-cap 100 is holding above the 41,900 mark. We saw it making a move towards 42,000, but we have given up around 30-40 points from there. The small cap index, although is under pressure, is firmly holding above the 13,800 mark, and as of 10:10 a.m. it was the only index between the 3, the large cap, the small cap and the mid cap, that was in the red. Nifty small cap was down 0.33% at 13,811 mark. Volatility has picked up. India VIX as of 10:10 a.m. was up 1.65% at 12.44 sort of levels. But with that, we have completely run out of time on this edition of First Take. Keep watching News 9.